Welcome back to the Dividend Diplomats YouTube channel. You got your boys here, Lenny and Bert. The Dividend Diplomats. Guys, I don't know if we're going to be the first people to tell you this, but the stock market has been dropping like crazy over the last 3 days. The news of tariffs have sent shockwaves through the market. Stocks are plunging. Long-term investors like us are running into the market. In today's video, we're going to talk to you about some of the stocks I have been buying as the stock market has been falling.
Guys, smash that subscribe button. Give us a nice thumbs up. We're filming this here on April 7th, here at 9:45 at night. One of the most roller coaster type days we have seen in the last, 10, 15 years, guys, happened today. Market down a few points, up a few points, flat, down, up, down, 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 down. Baby, are you down, down? Guys, So it has been a fun time to be in a dividend investor. Why? Catch those last videos because you're now able to buy more passive income for less. Today's video is going to be a lot of fun because Bert has been a hell of a busy man over the last few business days.
That's right. So we're going to talk about my purchases that aren't part of my ordinary weekly purchases, which consist of 18 shares of SCHD and 1 share of VIG. No. That's not part of this. We're going to talk about the extra purchases I've made since the tariffs were announced, since the stock market went tumbling down here. So let's jump into this, everybody. In total, during this period, Lanny, I put in over $2,000 into the stock market through 6 different investments, through 6 different companies and or ETFs. We're about to walk through each one of them with you. We're going to walk through the purchases, show how much we put in for each, and share a little bit about what's been going on with my positions.
Guys, let's see here. What that first stock, Bert, I mean, you mentioned that you wanted to buy more of this stock, and gosh damn it, you did, buddy.
That's right here. This was on the 4th. On April 4th, I bought 1 share of Salesforce, ticker symbol CRM. I talked about the position, how I wanted to build it in a video about a week or two ago. At that time, Salesforce price was in the 260s. I talked about how I was kicking myself for not grabbing it more when around my average cost basis of 232. Salesforce dropped to $245.29 on the 4th. So I scooped up 1 share of Salesforce, which added $1.66 to my dividend income. This one wasn't obviously income focused. Tech has been hammered, and you'll see that theme throughout the rest of these purchases, Lanny. But I said I wanted to build my Salesforce position. I kicked myself for not buying more when it was down before, so I'm not making that mistake again. I'm at least grabbing another share or maybe 2 along the way.
What's crazy is if you had somehow a market order at the beginning today, you could have grabbed it at like 231, dude.
I know. That's the thing. That's the thing about these times. I'm not so much worried about trying to catch the bottom of all of this. I'm finding these good stocks. I'm buying at the time when it's a good value, and if it goes down, I'll buy more. So yeah, I missed the 232 low today, Lanny, but I caught it with other stocks in my buying that we'll come back to in a little bit.
Never mind.
Yeah. So let's go into another tech stock that I bought.
Big tech stock. You've been buying shares after shares after shares after shares. You've been buying this starting, was it Q4 of 2024 that you were buying this, or is it like the beginning of last year? I can't even remember.
It was either Q4 or Q1 this year. It was a recent stock purchase, and I said I wanted to get my wife and I to collective $10,000 investment in this company. Google, Alphabet, ticker symbol GOOGL.
Give me those Class A shares.
Yeah, it was Class A shares. I bought 1 on 4/3 the first day of the market fell with tariffs at 152.47. I grabbed 1 this morning at its low of 142.68 right before the stock popped right back up. So in total, I've added 2 shares of Google for $300 or $295.15 at an average cost basis of $147.58, which I believe is right about where Google has finished the day right here. So adding
did finish up at 146 and change.
So right there on the line where it is. So I've added $1.60 to my dividend income from this. Again, it's Google, much like Salesforce. You're not buying it for the income. You're buying it because you believe in the company in the long term. Just like Joe.
You're not buying it for the income, but you're buying it for the income. No, I'm kidding.
That's right. But I just couldn't quit the stock. Oh my gosh. I could not quit the tech sector, Lanny. The
No, you got another one on the way here because this was actually one of the first ones you bought on April 3rd.
That's right. It was Qualcomm, ticker symbol QCOM. Again, I didn't catch the lows on this because I bought it last week. Its lows reached into the 120s. I grabbed 2 shares at least at 142.24, adding $284, adding $6.80 to my income. Much like Salesforce, Qualcomm, I have a larger position. It's over probably not over $6,000 anymore. The market value was over 6,000 a few weeks ago, probably in the 5,000s now. Going to keep building my position in this massive semiconductor company too. So taking advantage of the tech discounts that I'm seeing here.
No freaking doubt about it. I mean, I like it. So far, guys, Bert bought a share of Salesforce on a Friday, bought a share of Google on Thursday, and a share today of Google, 2 shares. He then bought 2 shares of Qualcomm, 3 tech stocks. But he wasn't done yet. He was going into the fintech banking space. And we're not talking about SoFi. We're not talking about Hood. We're talking about one that's not talked about enough.
Upstart, ticker symbol UPST. Lanny, this stock is getting hammered in the fintech space. What does Upstart do? They originate personal loans, they originate HELOCs, they originate auto refinance. So obviously, as consumer confidence gets beaten down, you're going to see a pullback in this company. I bought it initially, Lanny, in the teens. I built 61 shares in the teens, and I kicked myself for not grabbing more then. It rose as high as $70 per share earlier this year before coming back down. Naturally, I didn't sell. I decided to hold. Now naturally, obviously. So when it was in the 30s, I just said, screw it, I'm going to grab some more.
My investment quadrupled, so naturally, I just continue to hold.
Yeah, my cost basis went up, but I grabbed it while it was down. I grabbed 5 shares at 34.30 on 4.4. No income. They don't pay a dividend, but this one is one of the ones that has actually popped since I added those shares. Right now, Upstart sitting at 37.78. So,
yep, up about 10% already on that purchase, Bert.
Yeah, so they'll see what's going. Yeah, well, as consumers figure out what's going on, as banks, people that buy the loans from them figure out what's going on, things will naturally shake out for SoFi and Upstart, some of the bigger players in the online lending space.
Awesome.
Yeah.
So you doled out $171. So again, to recap so far, we ain't done yet. Bert's not done yet. Bert's like, this is a Royal Rumble style. We're gonna have another entrant here. But he's bought Salesforce, CRM, Alphabet, Google, Qualcomm, QCOM, and Upstart, UPST. But he said he's not done yet.
No, that's right. I added 1 share to my Vanguard Dividend Appreciation ETF, ticker symbol VIG. Told everyone I want to get to at least 100 shares of VIG by the end of the year. It's pulled back from its highs of around 200, obviously, because it's got some tech focus in there. I have 1 share at 180.97, adding about $3.44 to my income. So I didn't catch it at its lowest point. When I bought it I bought this one on 4.4, but you know what? That's why you buy 1 share every single week as well. I grabbed 1 share today lower. And I'll maybe even throw in a little sprinkle more of VIG if these prices continue to fall.
Love it. Love it. ETF getting in there, diversifying the risk a little bit. But Bert, there's another small purchase you did on 4.3, 4.4, and 4.7 of this other ETF.
That's right. SCHD was added. So this has been the one that's been the biggest chunks, the biggest purchases that I have bought in my wife's account. Why? When times get tough, I'm not just buying individual stocks like I did with VIG. I am happy to buy those ETFs. I'm happy to buy and get the diversified risk. You don't know where the market's going, so it's good just to build up your ETFs that you're comfortable with and the ones that you're adding in your position and just keep attacking and building that position. And that's what I do with SCHD. 4.3, we grabbed 10 extra shares at 27.02. So that was 270 thrown in there. 4.4, we said, F it. We put in 20 more shares of SCHD at 25.78. So that added $515. And then this Monday, I've been saying I've been buying 18 shares of SCHD. I rounded it up to 20. I threw in an extra 2 shares on this Monday morning purchase at 24.44. In total, over this span, Lanny, I've added 32 shares of SCHD for $834.68, an average cost basis of $26.08. This is going to add 31.72 to our forward dividend income.
Impressive. Almost $1,000 more into SCHD, adding a wallop of $31 in forward income on top of already his 18-ish shares he buys every single Monday, guys. So to recap, 1 share, 245 CRM, 2 shares Google Alphabet at 295 total, 32 shares SCHD, 835, 5 shares Upstart, 171.50, and 1 share VIG at 181.
In total, we put in I had $2,012 into our portfolio above our weekly purchases, adding $45.22 of income with a yield at 2.25%, everybody.
And guys, these are the times right now where you don't know the market, you don't time the market, you don't time the bottom. But when you see flash sales, 5%, 10%, 15%, some 20% discounts, you buy more if you believe in the business and it's an integral part of your portfolio and your dividend investing strategy. Exactly what Bert was doing here.
Yeah. And look, I'm not messing around. I'm not trying to catch the lows for these companies. As you can, I'm not kicking myself that I didn't get Salesforce at its lowest point. I'm not kicking myself that I didn't catch Qualcomm at its lowest point, or Upstart, or VIG, or any of these for that matter. I'm just happy that I'm adding to the income. This market is so volatile right now. You don't really know what's going to happen. If anything, what happened on 4/7 should be an indicator that you should just invest when you want to. You should make sure you get the money off the sidelines into the market, because news is moving so fast. Things can change like this. The market, the S&P 500 had that 4% swing in a matter of 10 minutes, I believe it was. And if you were waiting, you're trying to catch that bottom, you may never have gotten it. And that might have been your shot. So just get the money into the companies or funds that you like. Don't worry about that price. Don't worry about catching that low. Just build that income and grow your assets.
There it is, guys. Let us know what stocks you have been buying. Were you buying the dip? Were you rebuying the dip? Were you buying the dip today here on April 7th, guys? All about buying the dip here on the Dividend Diplomats, especially when you can add, again, I'll say it again, call me the broken record. You can buy more passive income for less, guys.
And let us know in the comment section what stocks have you been buying, what ETFs, and more importantly, if you haven't already, subscribe to the channel. Give this video a thumbs up. And remember, you're either with us or you're against us, Jack.
Bert, the Herd, and Lanny from the DD over and out.